Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Haar, Managing Director at Swan Bitcoin, Greg Magadini, Director of Derivatives at Amberdata, as well as Alice Liu, Lead Researcher at CoinMarketCap. We're here to discuss what's been impacting the price movement in Bitcoin, as well as the potential impact of the national election and some longer-term outlook as well. It is great to have everyone with us. Welcome to Trade Talks. And John, let's talk about recent Bitcoin price movement. It really has been sideways. Or some of the reasons that you can attribute to that? Is it because the asset class is maturing and it's not seeing as much volatility, or is there something more fundamental behind that?
Yeah, I think we pulled forward a bit of the price appreciation. Earlier this year, you had the spot Bitcoin ETFs get approved and launched in January. You saw a big run up in price pretty soon after that to the 60, 70K range. And we've really been range bound in the 50 to 70K range for about 6 months now. I think longer term, the thesis for Bitcoin remains unchanged. I think markets as a whole are grappling with a few different things right now. Is the US economy headed into recession? Will the Fed cut rates in September? And what does that mean for the markets? Are US stocks a little bit overvalued, including the Mag 7? And then should investors brace for volatility heading into the US elections? I think Bitcoin's affected by all of that. But when you zoom out a bit, yes, Bitcoin's been kind of choppy and sideways for the past 6 months, but last year was 150% up year for Bitcoin. This year to date, it's up somewhere in the 25 to 30% range. So still positive, but yes, choppy for about 6 months now.
And Greg, when you think about the theory that inflationary pressures could be one of the reasons driving up Bitcoin, what are your thoughts about that going forward? What if, inflation does come down a bit and the macro environment does shift or change?
Yeah, absolutely. I like to view Bitcoin in side by side with gold. Bitcoin is essentially the digital gold. Gold is at all-time highs right now, and I think that's really reflecting, lower rates coming forward and monetary easing that essentially might, make hard assets worth a little bit more. On the Bitcoin side, we've seen a little bit of a divergence recently, and that's really where I think the political landscape is starting to be priced into Bitcoin a bit. So if we have a Harris administration, it's a little bit more of a bearish environment. If we have a Trump administration, it's a little bit more of a bullish environment. And until we have a conclusion there around the election, I think Bitcoin's essentially has to go sideways. And that's where the divergence between Bitcoin and gold, macro, and essentially the political landscape stand.
Yeah, and I definitely want to get more into the political landscape in a moment. But Alice, I want to get your thoughts in terms of what came out of Jackson Hole and Powell's speech. It appeared to me he perhaps took a more deliberate, cautious stance relative to the market's expectations that we might get a series of rate cuts. Do you think that could potentially lend to more market volatility, or is some of that priced in at this point?
Yeah, definitely. So what we saw with Jackson Hole meeting is that the Fed is now suggesting a potential rate cut coming up in September. I think the market is generally anticipating 25 bps cut, but potentially, let's say on the 6th of September, the non-farm payroll comes out and say potentially there might be even further actions in the market. This will for sure spike the volatility in the market, and together with just idiosyncratic risk of crypto market coming into September and October, there is historically a lot more volatility as well.
Yeah, and I feel like if we do get more than those 2 rate cuts, and with the Fed shifting their focus to the employment market, if we were to get a 3rd or 4th, perhaps it can be, you could interpret that as that the economic dynamics are really shifting, and there could be a potential for more economic volatility as well if we see a significant decrease in jobs. It's like, you get the rate cuts, but at the cost of what?
Yeah, definitely. Yes. So to your point, the market is, in general, crypto and Bitcoin at large is still very much considered as a risky asset. So when the economic conditions are like this, I think generally investors would be a bit cautious to that. But I have to say, on the optimistic side of things, there is something unique to Bitcoin itself. It's the halving cycles, right? So if we look at it, generally speaking, the bull market occurs something between 518 to 548 days after the halving. And right now that cycle should suggest coming into end of 2024, beginning of 2025, we should be into a much quicker momentum going into a bull phase of the market as well.
John, let's talk about Bitcoin having more political support, or at least making it in the spotlight in terms of, what's happening with our national election and politics. I mean, if you look back even just at the beginning of the year, Bitcoin and digital assets in general really weren't on the campaign trail, right? It just seems to be a little bit more recent than that. So how do you interpret it?
Yeah, I think you hit the nail on the head there, Jill. If you would have asked me a few years ago, hey, John, when do you think that Bitcoin is going to be a topic discussed by presidential candidates in the US? I don't think I would have said 2024. So by default, I probably would have just said, oh, it'll be 2028, the next cycle. So I think it's a big deal, just the very fact that Bitcoin and crypto are coming out of the mouths of these presidential candidates. Do I think that they deeply understand Bitcoin and care about principles of sound money? No, I don't. But they're talking about it. Former President Donald Trump went to the Bitcoin conference in Nashville. He spoke there. RFK Jr. was there. Vivek Ramaswamy was there. Other Congress people were there as well. So that alone is a big deal. In terms of what legislation we actually get out of that, it remains to be seen. I do agree with what Greg said, that generally speaking, it seems that the Republicans are more favorable on Bitcoin and crypto, and the Democrats are less favorable. They've just been less clear with what they really think about it. So I think the simple rule of thumb to use now is that a Trump presidency would likely be more favorable for Bitcoin and crypto. But again, it remains to be seen what actual policies might get passed.
Right. But John, to your point, it is encouraging to hear that a framework is at least more in the national spotlight. And to your point, different conferences highlighting that. When we were at Consensus just before the Nashville Digital Asset Conference, we had a whole stage behind us and a full day of global regulatory and legislation framework, and how, integration of capital markets. And we're having really mature conversations around this asset class. And to me, that's just as encouraging, or even a bigger catalyst than product coming out. I mean, laying down a framework, or at least, speaking about, opens up so many other areas in the digital asset space.
Totally agree. I mean, you have former President Trump talking about a potential Bitcoin reserve, or Bitcoin stockpile, as he called it. So, that's out there. Again, it's not legislation that has passed, but that's the type of things that are being discussed. I think the fact that the ETFs exist, the fact that politicians are talking about this, it just gives a little bit more legitimacy, a little bit more credence to the asset and the asset class. And I think we'll continue to see that play out in the coming years.
And Greg, let's pull in some of your derivatives experience here, and how the concept of gamma, if you can give us a high-level overview of that, and how that could also impact vol heading into the election.
Yeah, absolutely. So typically what we like to look at is dealer positioning. So in the options market, dealers will remain delta neutral. So they'll essentially hedge that delta exposure, and the change in prices causes a change in the delta hedges. That's sort of the gamma component. So if I look at the implied volatility in dealer positioning, what we're seeing right now is that the options market is pricing in a lot of volatility for the election cycle. So normal volatility in Bitcoin right now is about 55. And if we look at the forward volatility, which is really the differential for that week of the election, we see 80 vol. So that's telling us that, yes, the option market is paying attention to it. And yes, the broader crypto market as a whole is also paying attention to this election. I think there's another couple interesting components. So we've talked a lot about Bitcoin, but really the more sensitive blockchains to regulation are going to be Ethereum and Solana. A lot of their value comes from the projects that are built on top of their blockchains, DeFi projects, NFT projects, things like that. Those are really sensitive to regulations. So if we get an election that brings us more regulation and more, categorized as a security for these projects, more headwinds, Ethereum would underperform Bitcoin even more so. And if we have a sort of a positive environment and easy regulation, I think we could see Ethereum outperform Bitcoin in response. And we're seeing that in the options market as well. There's a higher implied volatility in Ethereum going into the election than there is in Bitcoin. So really, this is what the options traders are looking at right now.
Yeah, and Greg, that's why I wanted to bring in your derivatives experience. And if I could high five you through the screen, I would, because that's an important distinction to make. When you think about Ethereum, it really is the market structure underlying all of this, right? So, I mean, think about traditional capital markets infrastructure. I mean, it's one of the most heavily regulated areas across any sector that you're taking a look at. And I also want to take another step back when you're talking about Gamma going into the election. Would you say that's similar to a stock going into a big earnings event, like an NVIDIA as an example, which was, one of the biggest things that happened this week in the equity space? Is it somewhat similar to that when you're looking at how the options market is pricing it going into a specific event?
Yep, I would say it's exactly like that type of earnings event. The one caveat is that because crypto is so new and people don't know, what's going to move this asset class so far, there's still a lot of opportunity for these types of events to be mispriced. Something that comes to mind right now is the September 10th debate. The September 10th debate has zero options premium priced into the surface. And theoretically, we might get a lot of clarity post-debate. We might see a lot of polls going one way or the other after the debate. So to me, that's kind of one of those opportunities that maybe the market is overseeing.
Yeah. And Alice, you had noted a few other events that could potentially be attributed to Bitcoin's movement here: the German government sell-off, Genesis and Jump trading liquidations. Tell us about some of those other events and how it could be impacting Bitcoin.
Yeah, sure. So what we saw in June time and July time is the German government selling off their Bitcoins into the market together with the jump trading that we saw, the recent liquidations. So when you have institutional wallets that are exiting their positions and dumping a lot of the coins into the market, I think generally speaking, it would trigger on the effects of the price going down. So what we are saying right now is very interestingly, during Asia trading hours, BTC price performance would be on the optimistic side, whereas when it moves to the US trading hours, it seems to be on the downside. So a lot of the whale wallets and their movements together with the institutions and the ETFs, I think to monitor where the flows are going is going to be quite important coming to September time.
Yeah. And John, to follow on Alice's point, there are longer term holders taking profits. I mean, one of the big goals here was to get Bitcoin and other digital assets to institutional holders, which in my mind, they're going to be trading that with traditional, portfolio parameters. Do you think that could also be attributed to it?
Yeah, I think there's been some on-chain evidence that longer term holders have been selling Bitcoin with this year at various points, which can be understandable. If you've been holding Bitcoin for many years and you're going to sell some, take some profits at prices of 60, 70K, I think that's pretty understandable. But longer term, I still see that the future outlook for Bitcoin remains unchanged in my opinion. I think that's largely driven by outlooks for fiscal and monetary policy going forward, if you'd like to get into that.
Well, yes, let's get into that. How do you think it's going to impact it, particularly from the fiscal policy perspective?
Yeah, absolutely. So I think Bitcoin being a sound monetary asset, it exists and it benefits when you're seeing monetary expansion in the fiat world. And what are the two things that largely drive monetary expansion in the fiat world? It's monetary policy from central banks and it's fiscal policy from governments. Also, commercial bank activity, but fiscal and monetary, I think, are the biggest things to look at right now. On the fiscal side, you have the US, largest government, largest spender, largest debtor in the world, is currently spending at a level of deficit to GDP as a percentage basis at the highest level we've ever seen outside of a recession. And importantly, we're talking about the election here. I think that's going to continue regardless of which party wins in November. So that's important to keep in mind. On the monetary side, the central bank side, we've already talked about the Jackson Hole meeting. Powell is signaling rate cuts. Who knows how fast he'll cut, but he's signaling it pretty clearly. Also on the monetary side, the central bank side, the Fed has put out a report that they expect their balance sheet to begin increasing again at some point in 2025. So you put all that together along with Bitcoin's historic cycles, I think it all adds up to 2025 being quite a positive year for Bitcoin.
And Greg, to wrap up here, let's stick with market structure for a moment. You had said that you're still seeing some discrepancies in pricing that you perhaps might not see in more mature asset classes. Are you seeing improvement in that area, perhaps with more market makers coming on board and infrastructure improving when it comes to market structure?
Yeah, absolutely. So we're starting to see little hatchlings of that right now. So we're seeing that in sort of the Bitcoin futures basis versus spot spread. So that's something where the differential back in 2021 and that in the bull market hit as high as 45% annualized. This cycle at peak bull market, we had about 30% annualized. But what we're seeing now is that now that you have a spot Bitcoin ETF in the market, people can now buy the Bitcoin ETF and sell the CME future against it. So you can essentially have that basis trade on in a hedged manner, which you couldn't do before. It was just too imperfect. And so now that people with lower costs of capital and access to prime brokerage balance sheets, they're able to put on that trade. And I just expect that trade to consistently go down and start mimicking more risk-free rates in the medium to longer term.
Yeah, we're also hearing that index options as well. So bringing in that traditional risk management profile to the space. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.